Hey everybody, Jerry here with Greystone Trading. I'm going to go over how I trade, how I set support and resistance, and how I will use indicators. And I'm backtesting indicators because I do not use indicators other than the candle information table, which is nothing more than telling me if the candle is firm or not. So I'm going to go over some indicators right now on the 5-minute chart of how I trade. And I'm going to show you all if this indicator would help me in a trade or hurt me in a trade or stop me from taking one, prevent a stop loss, etc. So I know a lot of traders ask a lot of questions about indicators, if they're good, if they're bad, if they can help you and then give you an edge. So I'm going to back test this one over just one day, not over like a series of 30 or 40 days or nothing like that. But I'm going to show you so you could essentially pick the indicator that you like with your strategy and see if it's helping you get an edge. So if you like the way this video is working out for you and you find it pretty valuable, please please subscribe, click the link below as well. So I'm going to get started with that. So I have all of my levels marked from Thursday's trading session. As you guys can see, I have previous day low, the pre-market high, the pre-market low, etc. marked here. I trade from 10 a.m. to 11 a.m. I do not trade on news candles. Those are some hard rules that I have. So these levels are all set. My support and my resistances are nothing. And right now I have the 20 SMA and the 200 SMA. So I'm going to make those invisible for the time being. So we cannot see those. And then I'm going to just hide my indicators really quickly here. And now I'm going to set support and set resistance on what would be very, very obvious for people. So now these trades have already existed, and we're going to look at some trades that could have presented and if these indicators would have helped or hurt you. So 950 here, not trading session yet. 955, you could have took the close of this candle if it would have closed and went firm for you. I took this trade, I actually collapsed it. So I did modified resistance up to 654.48 in real time when we were trading this session. And then I had an upper level of support up here, and then I modified it down after this candle didn't close firmly. So right here, this firm red candle closed below my level at 1025. I took this trade. I did get stopped out. I did not make any money on that. Then this trade here closes firmly again, and this trade was actually a full trade. Now, I got stopped here on this really weird wick here that came up to pre-market. I thought I had my stop loss high enough to protect this pre-market high area. However, I got stopped out, must have just got me by a penny. Several people in the group took that trade and they got a giant full push down on this movement here in this candle. So anyways, my overarching resistance, I'll move out of the way for now because that's not relevant in this trade. And then my underlying support, which is my first area of draw. So I would put that at the top of this stepping point here in the pre-market where you can see how that was a little bit of support, it falls through it, and then it starts testing that as resistance, right? And then you can see here where this candle comes and retest it. So that's my first take profit area that I'm looking for, is this little section here. So on this particular trade, if you would not have gotten wicked out, you had that wide stop. So that was just a little unfortunate. So now I will turn on for you all to see the indicator of the 20 SMA and the 100 or the 200 SMA. So this trade here would have been below the 200 sloping down, but it would have been above. It would have been above your 20 SMA. So this would have probably on the 5-minute chart would have told you not to take this trade, which it did stop me out, but it did end up following through. So in this instance, this trade would not have been a valid trade for this indicator to work out and help you. So that being said, let's say you would have waited. You would have took the trade underneath this one, right? Underneath underlying support, which we had talked about. And one could say you would have had it maybe a little bit higher. Let's say you had your support matching this wick here, or let's say you even brought it up higher, matching the top of these wicks here, where that was resistance, and then it turns over here to support on this green candle at 950, and then it tests through it at 955, and then the green wick tested again, and it finally collapses below that. That would have been a really good level on this trade. You would have took that firm candle. It's now below this. However, you could have probably still said, no, it does not meet the criteria of the 20 SMA because it's sloping up and you want it sloping down like it is here. So I'm going to just draw on this a little bit here so we can get a better visual of what I'm talking about. So this here is sloping up. This is not what you're wanting. So this would have stopped you in this particular scenario on a 5-minute trade, on a 5-minute candle close with a firm candle. This would have been a full trade, guys. The 20 SMA would have stopped you from taking this, at least on the 5-minute chart. Now, does that make the 20 SMA and the 200 SMA an invalid confluence for your trading? Absolutely not. On this particular scenario, it does. So I wanted to go over of how I would put a SMA into that. So now let's look at another scenario. So I'll go back to this. Now let's just say I don't trade this time slot, right? Now I would trade from about 1:30 forward. I would not trade from 11:30 to 1:30. Like, it's a lunch hour, the volume's a bit lower, and truthfully, I just don't want that much time on the screen. So I like to trade from 10 to 11:30, and I like to trade from 1:30 to about 3:30, with ideally only about an hour to an hour and 20 minutes in each of those, and make your money and move on. So that being said, let's say we were looking in this time slot here. This is 12:20. This does not matter, right? This is our lunchtime. We're not going to trade that. So let's come into the 1 o'clock time frame. So here's your 1 o'clock. I'll go ahead and get rid of this line, and we'll move an actual clear level of support over here, right? And you have it at 12:50. So now we have a very clear level there, and we'll move resistance to here. We have plenty of room up to this pre-market low where it almost came and retested at the 1 o'clock candle. So we have a very clearly defined range. One could even argue that you would have gotten this lower level here at 12:50, 12:55. I'm, like I said, not in my trading window, so I wouldn't take that, which is why I'm going to emphasize current price action. If we were trading live at the 1 o'clock time frame, it never gives you confluence to enter. You have sloping down. You have sloping down on your SMAs. Brilliant, right? You have a very, very clear level of support up here at 649.09. You get your firm red candle. You get a green retest. Never takes out your thesis. That should not have moved far enough to stop you out with a 12 to 15% stop. And you get this gorgeous flush down here, which would have got you probably half off to 3/4 off. And then depending on how you manage the next positions, you could have probably got into some trailers here and got stopped out for a full trade, and if not, a 3/4 trade on this. So with this sloping down, this particular trade here, you would have entered at the 13:10 close. That would have been a really good trade for you, right? So this trade would have been a very valid trade, and this SMA would have helped you in this trade. And nothing about this would have said stay away. Now, here's another setup. Let's say we're going to move forward a little bit now in time. Let's say we're going to go to approximately here. We have now new support established. Bam, comes down, rejects this region right here. You can see it clear as day where it's rejecting it. It wants no part of that, right? It comes up. It now tests your support as resistance. This fucker goes down right here, comes down, and in this area here, this is what it does. Let's draw on this damn thing for you guys. You can see where it comes down. It retraces, but it never takes out the old support line, right? Like, it never takes this out. It never comes back up to it to break the structure. Now it comes up and it's closer now to your 20 SMA, right? So it's closer here. Now you have it. Now it establishes a new support from 1, 2, and now these 3 touches. Very good level. It crushes down below that. Boom, 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 boom. Full trade here. This is nice. This is a really good confluence. Me personally, this 20 SMA would not have made me enter or stay away from this trade whatsoever. This is nothing to me at the moment. And I like the way this thing is flowing. So let's turn this off so there's some clarity here. This trade here, it checks all the boxes. You're in this trade, firm close. You're in this trade up here, firm close, boom, boom. Now you turn the SMAs back on. You have downward slopes. It gives you a little bit more confluence. It does not give you your entry. So hopefully, the way I'm explaining this, you can find some value here of how you could use this particular one. And I'm going to do another video in a day or two of some other indicators that I have been back testing as well. And like I said, I'm not going to go through the whole video of wasting all y'all's time and make a 2-hour video of how to test it over 30 days. Like, this is very, very simple confluence. over one day of trading that the SMA may or may not have given you a good confluence to enter it on the 5-minute chart, which is what I use for my conviction. A lot of people will use the SMAs with a 3-minute chart, with a 12-minute chart, with a 10-minute chart, with a 15. They're using confluences on the 4-hour charts and all these different time frames. For me, it's nice and simple. I use a 1 minute on the right side. I use a 5-minute on the left side. The 1 minute just kind of tells a very detailed story for me. I'm never entering on the 1 minute. I'm always entering on the firm 5-minute candle close below my level of support or above my level of resistance, provided there is enough room for a draw for me to get a risk-free trade. And what I call enough room for a draw and a risk-free trade, I am looking to be able to get somewhere between 8 and 12% off on my trade, and I would call that an A setup. Now, at that point, it's only 50-50 to get the rest of the trade. That's an A setup for me. Now, if there is plenty of room where I enter my trade to get all of my positions off, to get 8 to 12% on my first half, to get 12 to 15% on my quarter, and then to get my trailers into the 18 to 25% or more range, that to me is the A plus setup of all times. Like, you'll never talk me out of an A or an A plus setup if I have enough room when it closes below very valid key levels and to go risk free. So hope you find this. Please subscribe to the channel, like, comment on it. And if you're interested in how I trade and want to learn how I trade, click the link below and we will book you a call. Have a great day, guys.